Hey everybody, it's Carmasino here at Chaikin Analytics, coming to you from Florida. Every week we do this here on StockCharts TV. We really appreciate the collaboration we've got with those folks over there. They do an incredible job, especially the folks that help produce my videos. So thank you to you. Welcome back from the long weekend. If you had one, I hope you did. Yesterday was the 4th of July. We had a great time here and, ready to rock and roll right now. So the markets are waking up and looking at and waiting for and did all this stuff already today. Worried about the Fed. We've talked about this many times. As a matter of fact, there's a video I did a few weeks ago, maybe a month by now, I'm not sure. It's called It's Not What the Fed says, it's what they do that matters, right? So they can say anything they want about raising rates and we might do this, we might do that. If nothing happens, it doesn't happen. But the point is that we've got momentum behind us. Things are looking strong. We've got all the talk of this new, you call it a marketing theme, whatever you want to call it, but AI, artificial intelligence, really isn't new. If any of you had an iPhone for many years, the app on there, you can ask the phone to do things for you, look things up, set appointments, all those kind of things. It's been around for a long time, right? It morphed into Netflix and other places, but let's just face it, AI is really a feature. Okay, it's a feature of cloud computing, and cloud computing is no doubt really the killer app maybe that people have been using for many years now, don't even realize it, right? So we store a lot of things obviously in the cloud, and a lot of things are even happening because of this, right? I actually have a setting on this video that I created. It's called cloud recording. It just goes to the cloud, and we download it, edit it, and get it out for production. But that's how this works. What you're looking at is basically a version of cloud computing in some way, shape, or form. A lot of things you look at are even documents that you store and everywhere else. What I'm getting at is that it's just another reason to kind of pay attention to tech, right? And lots of reasons tech was already running. We talked about those in the last several weeks. Like we had rates kind of subsiding. We talked about the Fed slowing their pace of rate hikes, and what did Chairman Jerome Powell say today? Those exact words. It's about the pace, all right? And we're not sure exactly what that means, really. We don't know if it means not another hike in the next meeting. We don't know if Jackson Hole is going to be really the key meeting this year or for the next rate hike. The point is that you got to follow the trends. That's what we do. And we look at different things. And today we're just looking at sort of a market that kind of reacted, wasn't sure right off the get-go, worried about, what the Fed might say today or what they might do. Again, we talked about that many times, but you're seeing momentum kind of take over here, and things are really holding up pretty well. Even though we've got a down day here, it's not that bad. Really, a bit of a sell-off. You got to expect that after a pretty big first half we had, especially in the NASDAQ, which is up like almost 40% or so. It's pretty rip-roaring, if you ask me. So we'll look at that. I'm definitely going to look at the S&P today. I won't do the bullish percent chart, but we're going to just look at the rally number 6, where it sits, what it looks like. And that's been a weekly rally since January 2022, last year. I've been kind of focusing on trying to spot the turn in the market. And I think we did a pretty good job. We found areas where between certain rallies, I think it was between 4 and 5, and then 5 and 6, where we saw higher lows, and then obviously eventually higher highs. And that's kind of when that turn happened. And it all coincided with a lot of things that are already happening externally. One of those is the dollar. We're going to look at that as well, the US dollar versus the NASDAQ. I'm going to take a look at that. And what drives the dollar? Lots of things, and certainly interest rates. Okay, so you've got to pay attention to those 3 things. It's that daisy chain of things, events that are happening and are push-pulling and, rearranging things, and having external exogenous events that happen that move stocks that you really just got to pay attention to. That's why the power gauge comes into play, talking about bulls versus bears. And then obviously you want to overlay your technicals, because you want to marry fundamentals and technicals. That's the best recipe that I can say most people probably adhere to. Maybe they're just fundamental, but I guarantee they look at the charts and vice versa. So technicians definitely look at fundamentals. I know I do. So we want to find them when they're both kind of set up in our favor, and that's kind of what we look for. One of the things happens sometimes on the downside. You see sort of a neutral rating and a stock starting to break down based off relative strength. I called the name out. I forget exactly. Might have been last week actually, and I think we talked about relative strength breakdowns last week, and one of them was Las Vegas Sands. I only noticed this today. I'm not sitting here, taking a victory lap. It's not a victory lap at all. It's really just calling out how the pattern recognition plays out. And the only reason I noticed it is because I kind of browsed through some of the big market, websites like CNBC, Bloomberg, a lot of those names. And on CNBC, I just saw it happened to be one of the top names, one of the market mover names that was down the most. So looks like it's down about 5.5% as I record. So we'll look at that chart, just kind of take a look, go back to the tape, right? Look at the game film, see what we did right, see what we missed. But we'll look at that one specific name. And then I'm going to look at a screen that I did that basically looks at short squeezes. All that says is that we're looking for decent looking companies, decent looking charts that have a high short interest, that maybe have already been part of a short squeeze that wasn't really advertised, so to speak. But what matters is the prices are already reacted sometimes. But you have to know there are some other names in that list that you may want to take advantage of. So we'll look at those. And now we're going to dive right into the ACP platform right now and take a look at the S&P. Let's take a look. All right, folks, we're here on the S&P chart as promised. And I don't have the bullish percent levels here. I'm figuring at this particular point that's not that important, but we'll look at it from time to time, just not today. I've been drawing this chart since 2022, looking for rallies, right? Looking for rallies that coincided with trend lines. I had that, right? I had a downtrend line here that was hit several times, tested on the downside again around that rally 6, broke it a little bit, kind of, wanted to test it. There was another downtrend line, or I should say an uptrend line here on the low from October, and it continued. Now, once we get those situations where we start to see between rally 4 and rally 5, we did put in sort of a higher low, and then we started to see a higher high, and then this meandering and all of that happening. We talk about the Fed and the external events that occurred that helped us get to these new levels, or should I say recently new levels, but visiting old levels, right? So here we are around that 44.50, which I called out as a number that's going to be sort of a target. It's kind of in another trend line. You can see that right here. And then there's a lot of folks talking about other highs and targeting and looking on the upside of the S&P. We can do that. I use a Fibonacci extension. I don't publicize it a lot. I don't really do those types of videos. But I thought I'd draw it today, just kind of show you from the low to the high and what an extension might look like. Getting back to this particular extension, obviously the next level is going to be around that 4,800, right? The previous high. That's going to be some resistance. We get there, we'll probably see 5,000. That's not an unreasonable expectation if we get there, right? Obviously, we've got great momentum. The Nasdaq's doing incredibly well. The S&P is doing incredibly well. But the next level does seem a little unreasonable of around 5,500 to 5,600 up here. But I don't say that to make a joke. I say it to say the opportunities could be there, for the markets to continue. But it is a massive stretch, and you just got to stick with the trends. And so if we start to break these other trend lines and create better new trends that we test and maybe build a channel or some sort of pattern that you can recognize and feel comfortable with, that's what we'll start to latch on to. Targets and all that other stuff, just leave that, for somebody else to kind of worry about. But I thought I'd talk about it, but not use it as any kind of predictive model at all. I just wanted to kind of throw it out there and say, that's where some of these targets might be coming from. Just be cognizant of it. That's all. Let's look at the dollar now. This dollar chart is actually going through a change, but I wanted to look at it versus the Nasdaq. So this is the NDX down here, and looking at where it stands, I drew these vertical lines at highs and lows of the index, right? So the ultimate low back here in 2020 was back in March of 2020 when the pandemic started. And there's the dollar where it moved to a level of 103, kind of where it's at today, right? And so you see the dollar level doesn't really coincide exactly with the NASDAQ level at all. But what it does do is it helps you sort of look at trends developing, maybe starting and ending, is a better way to say it. But when you start to see the dollar trend higher, this is where people were starting to talk about, hey, inflation looks a little, might get out of control. We've got too much spending. There's too much money in the circulation. And we started to see the dollar sort of go sideways, but the NASDAQ had topped a couple times in this formation pattern of the dollar. On the upside, the dollar ripped higher with rates, and then NASDAQ rolled over in 2022. We saw a couple of tests of the bottom here, and we started to move higher as the dollar subsided, right? So here we are. This happened back here in 2020. The dollar peaked, came down, the NASDAQ ran, where we saw the NASDAQ peak, the dollar run, and the NASDAQ rollover. Now we saw the NASDAQ really bottom around this level and the dollar peak, and the cycle starts again. And so this could be what we're seeing. I just wanted to call it out and kind of give you a visual of what you could look at. Let's look at the US dollar real quick. I'm sorry, the crude index. We just looked at that. The crude index, man, I'll tell you, this is pretty interesting. I've got the White House buy zone I built here. Man, I should have trademarked this maybe. It was announced in October of 2022 that the White House would start buying between 67 and 72. So I just thought I'd build a range box around it and just kind of watch it. And what happened, lo and behold, it's really adhering to this level. We're hearing about production cuts and all this kind of stuff happening overseas. Certainly possible to help support it, but so is that potential put, so to speak, here around this level where the White House said they're going to just replenish the strategic petroleum reserves. But I just thought it was interesting, and I wanted to call it out and look at it one more time because it really is holding. Every time we talk about it, it's holding. I mean, this is like, I think it's hit around this level about 3 consecutive times in a row here. We'll see if it holds. The more it tests, I feel like the weaker it gets, but that's not always true. All right, let's look at offense versus defense. I'm going to look at defensive sectors first. We know them to be the healthcare sector, XLV, the middle one here being consumer staples, and the bottom one being utilities, all still in a dedicated and certainly no doubt definitive downtrend. Ratios have turned negative here versus the SPY, and all of these are continuing lower. If we look at the other side, now these may not be all the sectors that might be considered offense, but they're the main sectors and the ones that have done extremely well in this rally. And all of them are, again, decidedly on the upside. And really, if you look closely at this particular chart, you can see the middle one is consumer discretionary. And on the ratio, we just had sort of the golden cross, the 50 over the 200 on a daily chart. So on the ratio chart, that's looking pretty good. Putting in, again, higher lows and now a higher high several times. So that looks pretty good. The momentum is really behind this name. Let's dive into the Chaikin system in just a minute and take a look at Las Vegas Sands. Before we jump on the Chaikin system, I thought I'd call out that you guys can follow me here on P Carmasino at P Carmasino on Twitter. I kind of put out some things we're doing over the weekend here down in Florida. We talk about a couple of the articles I write. I throw up some things on the SPY and looking at the Chaikin power grid. And just some other things, a couple of charts here and there. Nova Nordisk was one we called out. But last week, we talked about Las Vegas Sands as having sort of a relative strength breakdown. If you remember, we're just talking about this name. Now, look, it's down today. I don't know what the news is. It's down 5.2%. But it is oversold, except for one really important factor. We've got negative relative strength, and it's really, I don't know, I guess respecting this long-term trend that we use. It's a 200-day double exponential moving average here on that sort of the orange or magenta line, if you can see it there, depending upon how your resolution looks. But it's this sort of line here that's drawn here in between what we call our volatility bands. And all of that was kind of coinciding into an area of resistance. But more importantly, the negative relative strength was calling this out. And I thought I'd just revisit that again, to go back and look at the game film and see what did we see, what didn't we see. Really all we saw was that relative strength here setting up on the downside, and really this acting as resistance. I don't know if this price was a specific resistance for some reason. If you look back, again, put your crosshairs on any chart, you can see a formation sort of a range area here, and it's sort of a sideways trend. And a lot of people might look at that as a bull flag. I'm seeing it as a bear flag only because it's turning negative, and it may not even be the right definition of a bear flag. My point is that it was moving sideways and now falling, and that's why it was on the relative strength breakdown list. Yeah, I promised some names here to look at that have a high short interest. If you look here, this is an interesting name. It's up incredible today, even in a down market. But you can see we've got short interest is very bearish, and what that means is that this has a high level of shorts, meaning there are more or just an exorbitant amount of short positions on this name. And when stocks like this have these kind of rallies, you can, start to define them as short covering rallies. They may not always be, there may not be an exact definition for that. The point being is we're seeing a lot of big names here, or names that are up big. They may not be big names. This one's a $4.7 billion name, AI, right? Artificial intelligence, C.AI Incorporated, but a name that has been moving higher, good relative strength, obviously good Chaikin money flow, strong stock and a strong group. But even names like Carnival Cruise, look at this. This has been an amazing chart. Sideways action and then started to move. Again, is short interest the culprit on all of these? I don't know for sure. What I'm saying is that they do have high short interest readings, and maybe the shorts are continuing to bet on this, but it's starting to hurt, I think. And that's where a short squeeze really comes from. And there's some other, popular names on here like Wix, the website builder. Again, sideways action, but this one's showing maybe support of the short, right? In other words, it's not really rallying and running away, but it has a negative relative strength. So you want to kind of decipher this based off the technicals that you see, maybe the industry group as well, and maybe some other pieces of information that you can piece together and put a weight of the evidence approach in your favor. But at the same time, make sure that you understand that, short squeezes can come out of nowhere and they happen frequently. Just be careful that you're not on the wrong side of that, right? Just wanted to call that out. It's a factor that we follow. I thought it was interesting to point out. All right, everybody, that's all we have for today here on the Halftime Show. Again, I'm Pete Carmasino. Follow me on Twitter at Pete Carmasino. And please tune in each and every week. Leave some comments, leave me some feedback. Love to hear what you're thinking. If there's anything you want me to go over or review on these weekly chats, just let me know. I'd really appreciate it and be happy to accommodate if I can. Take care. Thanks for tuning in. See you next week.